Hey everyone, thanks for joining us on another IBR video. We're going to be going into Trump getting COVID impacts, market stuff, and then talking about gold, some gold stocks we've been looking at, things to either stay away from or take maybe another couple or deeper look. First things first, Jeff, let's dive into Trump getting COVID. What's your take on kind of an investment market front? What have you seen?
So first off, just on that note, though, obviously, anybody that gets COVID, it's terrible. Just like anything else, any other kind of illness that's potentially lethal, it's a bad thing. And I was quite shocked actually to see some of the media and some of the so-called, big celebrities say nasty things about anybody. It shouldn't be a political thing. And nowadays, I guess it's just not shocking. It's part of who people are, unfortunately. People wishing death upon him. It's like, that's pretty messed up and it's pretty sick. And people that wish death amongst others, I hope that they lose their jobs and I hope they become, unemployable. It's not the type of person I'd like to have on my team. So I just wanted to say that to get off my chest, because it really hurts me to see that stuff. So anyway, now here we are. Trump is out of the hospital, back at work. He's out there tweeting again and swinging the bat and trying to hit some home runs. Good for him. I'm glad that he's happy and healthy, doing what he likes to do. So on the note of, is that good, bad for the markets? It's a great thing. So the fact that Trump is back and the markets will respond, it will be positive. What markets don't like is uncertainty. It's always been that way forever. Markets like to know that there's a path forward, whether it's Trump or Biden or whatever it may be. Markets just like to know. What they don't like is uncertainty, and that's what leads to market decline. So in this case, it's great. One other factor yesterday was Trump coming out and saying that he's not going to go ahead with the stimulus. That is a good thing. It is a good thing in the sense that now the market knows that he's not going to go ahead with it. In fact, just to clarify, he won't go ahead with it with the current, Pelosi, et cetera, and what they want to do in that package. What he's saying is, listen, I'll do this in a month or two after the election, after I win, in his vision. So after I win, I'll do my own stimulus, and here's how I'm going to do it. So that's a good thing for the market. He wants to see the money actually going into the hands of the public, not the hands of the states that have mishandled budgets recently or in the last year or so. So for me, that is a good positive thing for the market.
And speaking of gold, we could see its play of safe haven. Well, when he was announced Friday to be hospitalized, gold rose over the weekend and playing out its safe haven again.
True, no doubt.
What's your take on the current prices? I know IBR wrote about it in 2017, calling a 2,500 gold price target.
Yeah, no, for sure. I still think gold has got some ways to climb. I think that you're safe getting in at these levels, no doubt about it. If you were to buy the physical metal, I think you'll do well as a safe bet. In terms of stocks, the big cap stocks, the Newmonts, the Barracks, I think you'll do really well. I was looking at, for instance, the South African JSE, the Johannesburg Stock Exchange, and looking at all the gold stocks here. There are I would say that the index is up about 55% year to date. So that's a big move for the gold stocks here. It's been a hell of a run. I've mentioned before that some of those gold stocks here have risen 7, 8, 900% this year, the smaller junior ones, of course. But even the big cap guys, they were up 100, 200. They've all had tremendous runs. It's been amazing. In the junior sector, Jason, I know you like a couple up in Canada. I'll let you talk about those in a second. But overall, I'm still very positive with gold. Look, I like it. I think it's going to continue to do well. We're in a session right now. We're in a state where it's pausing a little bit. That's healthy. It's forming a new base from which to go higher. You always need that in any market. Markets can't go straight up. Well, some do, but if they do, that's unhealthy. But you always need to go up, form a base, dip a bit and move up from there and form new investors at those bases. Jason, over to you, man. What stocks are you liking right now in that junior sector?
Yeah, well,
Your
we're
baby.
kicking it off on the low guys, and again, pretty biased. Being a marketing guy myself, I definitely like to avoid companies that I see have been pushed a lot. I kind of avoid those, especially in the junior sector. We talk about betting on the jockey before, and Elon Musk. In gold, I kind of do the same. I like to look at Eric Sprott, where he's invested, and companies that he invested in that didn't just take off, that are kind of there, that are close to the levels he invested in. There's one that was on my mind, again based in Canada, but he's got a few mines in Australia and other places, is Nubian Resources. Again, betting on the jockey. Guy sold a silver mine for 750 mil like 8 years ago, so I love that. Eric Sprott is the biggest investor. So again, I'd like to look at those types of things. Eric Sprott is of course a smart guy, though he is throwing a lot of horses in the race. Another one, if we're talking gold, I am a big shareholder in a Bellevue Gold company that's based in kind of the BC Golden Triangle. Again, pretty low-key project. They've got a ton of articles that have come out from reputable reporting agencies that's even said it was a buy, and even gave it a 90% discount and still said it was a buy. They're doing some drilling right now. I know we're going to talk about, is it better to invest during drilling, after drilling? But it's expected that they're drilling a 1,500-meter hole, and it could be the next big porphyry of British Columbia. So those are my two picks.
And what's the name of the second one, Jason? I didn't catch that.
Bellevue Gold.
Bellevue. It's boy, does that ring a bell?
Farshad Shervani.
What's that?
Farshad Shervani, if you're familiar with the CEO.
It really rings a bell, but anyway, it'll come back to me. So that's good. So those are your two little junior babies. Yeah, I mean, overall, like I said, Luca, Jason, I remain bullish in gold. I think that the target, Luca, that we picked, I guess 2 years ago at IBR, I think we'll hit it. It's funny. You look back to that stage when I think we picked it when gold was around $800-900 or something like that, and I remember writing that, and I said, yeah, here it is. And people are like, it's never going to go that high. And well, here we are getting closer. So, it's one of those things you just tuck away. And that's why I love more of the long-term investment horizon, where you buy something, and unless those boxes are getting unchecked, you don't sell it. And that's unfortunately that Robin Hood kind of TikTok. TikTok seems to be where everyone's learning how to trade nowadays. That's a little bit scary. You got Instagram. A bunch of and Instagram. You got a bunch of 20-year-old traders, telling each other how to trade and make $13 on a trade because it's free. It's like they make $13, but actually had they bought something and held it for about a year, who knows? Maybe they could have made $13,000.
Well, you're touching on exactly what Warren Buffett's even said. He said people get caught up in the day-to-day investing, the week-to-week, the month-to-month. But look, if you believe in an industry in the long term, pick a few horses, put it in, and then carry on with your life. Check it every couple weeks, make some adjustments if you have to within the industry. But if you yourself are experiencing an industry growing, and even says, if you're at work and you're seeing a certain industry growing, you're seeing this happen, that happen, throw a couple horses in that industry and see what happens over the next couple of years. And I think that's exactly kind of what you're saying.
Oh,
exactly.
100%.
It's the beauty of compounding. It's against the day-on-day wins that everyone's looking for. Everyone wants to gain thousands of percent overnight. The instant gratification thing we're looking for. That's the completely opposite side of proper, sound, solid investing, where, as Jeff says, the thing we believe at IBR is you buy and you hold and you see a great return over the long run. There might be some great stories in between where you've played a speculative play, but that's just usually not the way you go about proper investing. And if you look at Warren Buffett's track record, that's basically what he has done.
Totally. Speaking of which, Buffett, his shares are trading at a big discount. I mean, and there's a great stock in my opinion. I mean, they're probably trading at half of where they should be. So there's a stock that you can pick up at a half discount at this moment, tuck it away, and own a little bit of Berkshire, and going forward do very, very well. But I think in the end, listen, the new day trade. I mean, day trading has been around for a while. It came hot back in the .com days with everyone calling themselves a day trader. I've said this many times. It's much like, every day there's a new, psychedelics company being born with, the new CEO last week was an Uber driver. And now all of a sudden he's the CEO of a psychedelics company. It's like, okay. So anyway, you got to watch out for these things. If you see too much hype out there, buyer beware, and stay away. If a company is actually, I always say, if they've got that box and they've said what it is, here's what our path forward looks like, and if they're checking those boxes, stick with them. You'll end up doing really well. When the boxes become unchecked, start looking at it, have a deeper look into it. And furthermore, just, you know what, Jason, I don't know if you have, but if you call up these companies, most of these CEOs, I hope, would make themselves available. You can call them up and ask them those questions. I mean, I personally, I do my part in terms of trying to make myself available as much as I can. I must have at least, I'm going to say 1-2 investor calls a day. Now, those investor calls are not just one individual, they're with multiple people on a Zoom call. So I may have later today at 5 o'clock, I've got multiple people on a call to bring them up to date, answer questions. I do it all the time. And what CEOs are, what they're missing is those are your stakeholders and shareholders that have great feedback for you. They're there to encourage you to make things happen, get better, be better, better products, whatever business you're in. And I take full advantage of that.
Yeah,
I see other guys
they're
go,
your
oh,
best supporters,
I'm too
right?
busy for that. What?
Yeah.
They're your best supporters.
100%.
And it's also adapting to new times. I mean, what we see many of them is they stick to the old routines of press releases, news articles. Is like come up to speed and leverage some of the technologies. I mean,
Do
as you
videos.
say, do videos with Jason. It's brilliant.
Yeah.
It gets your message across, and you get to connect much better.
Oh yeah.
Yeah.
I mean, the advice I'd say, look, you can even you can add CEOs on LinkedIn, send them a message. Hey, I'm a shareholder. I'm about to become a shareholder. Hey, people, companies love to hear that. I might be a shareholder. I've got a few questions. I promise you'll get a response. Just message a couple people on LinkedIn, get your questions answered. And like Jeff said, it's a great way to kind of dive deeper.
Absolutely.
100%. Absolutely.
Speaking of Buffett, what do you make of his recent investment in Barrick Gold? Is that a statement of confidence? And if you're an investor in between the big companies, let's say Newmont, Goldcorp, and Barrick, which one should you pick?
Geez, great question. So Buffett is sitting on a ton of cash. He needs to deploy cash. He does have new managers in there. For instance, the new manager that bought Apple a couple of years ago. Buffett would have never touched Apple in his life. For him, it was a bizarre holding to add to the portfolio, but he gave the chance to the manager to prove himself. And boy, that manager has made one hell of a call. So, that big stake that Berkshire has in Apple has performed, hugely. I believe they've been selling off a bunch of it recently, but I can't blame them. I mean, they made a hell of a return. So, but probably I got to tell you also, there are probably a few boxes that have become unchecked now for Buffett. So there's probably.
Well, here you want to talk about one that's super hot.
What's that? Yeah, what's that? Yeah.
He sold apparently all or most of his airline stock.
Oh, for sure. Yeah, no, I know. And I don't blame him for that. He did that way back in, I think, May or somewhere around there, right?
Yeah, very early on.
I don't blame him whatsoever. I mean, airlines are going to be tricky. How do you pick which one's going to survive? I think most of these airlines, their balance sheets are just beyond brutal. They're all going to need to be recapitalized. And not most, but many of them will have to go Chapter 11 in order to recapitalize the balance sheet.
Yeah.
That's how bad it is. I mean, listen, nobody out there is really flying much. I'm flying next week. I flew 2 weeks ago, but most people nowadays are still uncomfortable with flying. And, they're looking at it saying, I'd rather be at home with the wife and the kids. I'll do my Zoom at 10 o'clock and I'll have my meeting that way. Me personally, I'm a more traditional old school guy. I believe you got to meet people face to face, eye to eye, and share that bond and make stuff happen. I really enjoy that. I thrive in that atmosphere. So for me, I love to get on that plane and do my work that way. So the airline stocks for me, I'm with Buffett on that. I wouldn't touch them with a 10-foot pole at the moment. Luca, answer
Right,
your
sure.
question about Barrick, Newmont, Goldcorp. Listen, they're all great stocks. Great call by Barrick. Great call, I think. And they're doing it probably as a position of safety. And that's why they're doing it. Not to mention, they have so much cash on the sideline that they need to put that money to work somehow. So they're looking at gold as being a pretty good option, and that's why they did it. And I believe in it 100%.
Brilliant. Great answer. Thank you.
I guess, I mean, which one would you buy if you had to pick, or would you just buy both? I mean, I guess that was one of Luca's questions. Which one do you choose? You know, there's two, multiple giants. Do you just throw a bunch in the race?
I think you're okay with all three. I think that the smart investor buys a bit of each.
Yep.
So if you're going to allocate, 10, 15, 20% of your portfolio towards gold, you take that 20% of your portfolio and you buy a third, a third, a third. And the great way to buy those stocks as well is, you just don't wake up tomorrow and say, okay, boom, my third is, $5,000. Here, I'm buying $5,000 worth of Barrick, 5,000 of this one, 5,000 of that one. You bet, maybe tomorrow you buy a third. So you buy, $1,700 today, and then you wait a little bit in 2 weeks, maybe it dips, or it doesn't, maybe it goes up a bit. There's nothing wrong with buying as the market's going up as well. But you maybe buy a couple third today, and in 2 weeks, maybe another third, and 2 weeks, another third. So you set a timeline for that as well. You say, you know what, I'm going to allocate my full position over the next 1 month. But you're okay buying all three of those, and that's the way I would do it: a third, a third, a third.
Speaking of allocation to gold companies, those are senior companies, kind of the blue chips of the world, been around for centuries, if you may. What about the junior?
That makes me feel good, buddy. Thanks.
We feel young compared to that, no?
What am I, I guess the longevity business is working out well for me.
Well, absolutely. You're 452 years old, no? Speaking of the juniors, we have seen a bit of buzz around two companies, particular: Amex Exploration and Star Peak Exploration, just next door to each other. Talk a bit more about that.
So yeah, I mean, in terms of the two companies themselves and what their actual drill program is, and how it's going and stuff, it wouldn't be fair for me to comment intelligently at the moment. I wish them both great luck, but one must always be careful about the good old area play. So the area play has been around forever. It's a way of inducing investors to get excited, to say that, hey, we're right next door to these guys that are doing this. So it's worked forever in terms of raising capital. Great promoters, geologists, they get together and say, hey, let's go stake out a property, claim that property all around this particular area, and then we can use the hype that's been created by Star in this case, and we can say that we're right beside them, and let's go raise a few $1 million and sink a drill and see what happens. That game has gone going on forever. Out of those that do the area plays, you're probably maybe 1 in 100 might have a little bit of success, a little bit. The other 99 will go straight down the tubes, so that's the risk. So those particular stocks, by the way, just to clarify for the audience, those are not the kind of hold forever stocks, these little junior gold exploration plays. You need to be on top of those things and be very careful. And, never look, a gift and say, like, if you've had a gold stock that you just bought yesterday and it's doubled in the last 2 weeks, you know what? Me personally, it's like, it's one of these junior exploration, area plays. I'll take that to the bank and say, I'm done. If I can make 100% in 2 weeks on my money, what a friggin' return that is over a year. So thank you very much. When the market gives you that type of a gift, be happy. Don't get greedy. It's the old saying, the pigs get fed, the hogs get slaughtered. So
Well,
And that holds true.
more famous words by Warren Buffett: "You only make money when you sell." So
Very
again,
true. And
definitely
you've
take
all
money off
heard
the
those
table.
stories. If only, if only, if only. It's the old coulda, woulda, shoulda. Oh, I could have bought this if I would have
Oh
done
my
that.
God,
I
it
should
went
have
to
done that.
$30 and I didn't sell.
Yeah,
Look, take money off the table, right? You don't need to sell it all, but definitely put some money in your pocket, for sure.
right. So look at the two stocks. Like I said, it wouldn't be fair for me to comment really at the moment, but I will look into those. And thanks for mentioning those. But and I see that they have had good moves. And Jason, to answer your question, when do you buy these things? Do you buy them on the way up when they're drilling and assay results are coming out? Generally speaking, that's when you do want to buy them, is during that hype phase.
So here,
One,
let's intro it a
yeah,
little bit. I would love,
sure.
there's a ton of questions. People are asking, when do I buy a junior stock, or do I buy it like right now in Canada is, drilling season's kind of just ending. Do I buy them, while they're drilling before assays come out? Do I wait for assays? What's the time to buy? What's your opinion?
So great question. So now is the time generally when you want to be pitching them, selling them. And, with nothing much going to happen between drilling season basically ending and springtime when it's going to heat back up again, there's not much information out there. And these things are built on hype. Let's face it. They're junior little gold companies with some with, tremendous potential and stories. And that's exciting. But when the excitement dies down and there are no stories to share, people start selling the stock, and you're probably going to see a bunch of that happening. So you always want to be investing when these things start and they're into that drill phase, and then you start hearing, we're going to report our assays next Friday, and the stock goes up. But you got to be selling into that. You got to be selling into the news phase, not afterward. Again, quite frankly, if 100 companies were to report their assay results, I would say that maybe 1 in 100 might be somewhat spectacular, that might actually make the market react in a positive way. The other 99 will, release their assay results, and they'll just be kind of middle of the road, kind of like, and so what? Drilling for gold and trying to make an actual mine takes years, and it takes a massive amount of capital. That early hype phase is that exciting part, and in the junior spec market, that's where you want to play. Don't think that you're going to invest in ABC at 10 cents and the chances are very good that it will become a mine, because that's just dreaming. The reality is it won't likely become a mine. 1 in 100, actually it's way more than 1 in
One in a
100, but
thousand, apparently.
yeah, it's like 1 in 1,000 actually may become a mine. So is that something you really want to bet on, like long term? No, but there's a great opportunity to play around in the early days of these junior gold deals and have some fun.
Yeah. And here's one more point, and you can both comment on this. So, and if the number isn't perfectly accurate, I took it from it's a questions or statements people are saying. Right now people are saying, oh, gold companies have more money and they're adding more cash to their balance sheet. One guy said, when it comes to investing, if you're investing in a junior hoping for a buyout, which a lot of people do, he says, keep in mind that typically the buyout price is around 1/3 to 40% of the all-time high that the stocks usually go to. Any comments you guys want to make on that? I don't know how accurate that is, but it
Yeah,
seems pretty accurate.
and any senior producer or mid to senior producer with enough cash to do a buyout of a junior to mid producer, there it's going to be it's going to be whatever, a $500 million or $1 billion or $2 billion, whatever it is, takeover. That will occur most likely at a premium, not at a discount to an old high. I mean, that number kind of sounds a little bit mixed up, messed up. And it's hard to say, without knowing the context of that, where it's coming from. But
So this guy has two examples to give you. I mean, he said, one went to $16, ended up getting bought out at 520. And then there was another one that went to 8 and got bought out at $4.
It could
So
depend on the uncertainty, right? So if you imagine a junior is building out a brilliant operations making all the rigs for drilling, etc. But they haven't got that certain found of finding
Deposit.
yeah, the
Yeah,
deposit yet. Then you might be talking about discounted price
absolutely.
from all
Very
time
true.
high,
Right.
versus a solid operations where you have some numbers, you're going well, and then you'll be adding the premium because you're interested in expanding your own operations.
Very true, Luca. You nailed it. So if there's a proven resource in the ground that you can actually calculate and say, based on this and based on potential, other drilling and efficiencies that we can add to the project, we're willing to pay a premium, and that does happen. On the junior side, maybe a stock got way overhyped and went up to $16 as an example, and then it got deflated big time. The bubble burst and it came down to 5. So, and then a senior says, what, these guys do have something good. We do like it. And the stock was way overhyped at 16. We'll pay 5 for it. So that's the flip side. And I can see that scenario definitely happening because a lot of these stocks do get way overhyped. I mean, it's incredible.
Yeah.
Yeah.
No,
If you look about the cash, sorry,
no.
to just address the point there you mentioned, that junior gold stocks got a lot of cash in their hands. If you look at the numbers, I got a statistic here saying from July 31st on TSX, 1.7 billion Canadian dollars were raised from year to date. So from early January to July, almost $2 billion. I'm sure we've surpassed that at the moment, has been raised, and half of that has gone to junior gold stocks. So it's quite right that in terms of the cash allocation and capital on their hands is increased this year than it has in the last decade. And if you also look at we were talking about profitability, what are the chances? We mentioned many of the numbers being very, very low for anyone hitting anything. We look and compare the gold spot price with gold exploration companies or even global equities. From 2004, these gold companies have significantly underperformed the gold spot and global equities.
Good technical background stuff there, Luca. I like it.
Yeah,
So,
looking back and relating that for today's outlook, with the hype, we might see some good price runs. But as Jeff, you said, beware. Some of these juniors are definitely not long-term plays. Play them now, see what happens, and hopefully you make a good profit and a good call.
Jason, there are a couple, as all three of us know, that we have not talked about at the moment. There are a couple stocks that we don't like. And we will be sharing those ideas soon. There's just a bit more due diligence to be done. They're trading at ridiculous numbers, and we'll probably share those ideas soon.
Yeah. No, cool. Here, so I've got one final question, and I'm not the biggest drilling expert, so some help here would be good. But one person, and this guy got a ton of comments about. So 800 comments on Reddit, which is a big deal. And he said, when it comes to investing in juniors or just exploration companies, how important is a model behind the drilling? And he says that when he makes his investments, he looks at companies that have spent, typically around $1 million to $2 million on doing, kind of 3D IP modeling of their property. Jeff, I know you've got some gold background. Do you maybe want to explain what that is first, and then, what your opinions are on his comment?
Sure, absolutely. And I would agree with that. There has to be, you've got to do some good groundwork in the early days of any of these properties. In the old days, back in the 80s, when we were raising capital for gold companies, silver, et cetera, in the old days, you were actually, doing an aeromag where the plane was flying over, looking at the ground from above and taking shots, into the ground. But, listen, that was back in the 80s. The technology today is so much better, so much more powerful. You're able to get so much deeper into the ground with so much more specificity in terms of the minerals that are in the rock in the area. It's just incredible what they can do now. So in terms of this guy saying, the modeling, It is absolutely so critical. In fact, a lot of artificial intelligence is now being used when it comes to this as well, where you're now looking at probable outcomes. In the old days, listen, you're just guessing. You know, are we going to find the vein over here, over here? Where will it be? At what depth? You know, a lot of guesswork. Today, you've got incredible algorithms that can go out and actually give you a probability as to if you're going to drill in this location at this time, at this depth. Here's the likely outcome based on the data that you fed it. So a combination of that old data that's out there and has been done. There are so many maps available where a lot of this property has been worked on before, and you feed that data into the algorithms that come out, and then using new sources of data that you use, using all the new geological equipment to look at the ground, put those into these algorithms, and you get these incredible feedback on that data, and it really, really helps the engineers figure out where to drill. Again, drilling, you can miss by literally 10, 20 feet. Well, you can even miss by a foot if you really look at it, but that's how this game needs to be so precise. Imagine drilling deep and you missed it by 10, 20 feet. You pull up the rig, you're like, we're out of here. We found nothing.
Hey.
Meanwhile, it was right there the whole time.
Well, it happens. And I mean, on your point, how much of even a tenth of a degree can matter in drilling, right? Obviously over 1,000-meter hole, that tenth of a degree, you can end up missing by, a lot. So it definitely important. And a lot of other things come into consideration. I've seen people talk about, going through fault lines, drills, like drill breaking, all sorts of stuff, which obviously can mean the end of some of these junior companies.
Oh, totally. Yeah.
Just to put your question in a very simple way, you can compare it to cliff diving. If you're on the top of a 20-meter cliff, you're looking to do a dive into the deep sea, you would want to know or at least be sure what you're hitting. You would never take the leap if you haven't examined the sea floor. And the same thing goes for here in drilling. You want to be with a company, invest in a company that has done that due diligence and is not just blindly jumping off a cliff.
Totally. And it's funny because in the old days, it was funny. You being back in Toronto on Bay Street, you'd see the geologists walking around with their maps. Their maps were these long tubes. They'd carry about 8, 10 of them in their hand, and they still have those as well. But they'd come in and present their opportunity and roll out the big map on the boardroom table with all these red and yellow and blue and green. You see that? That's where it is. And I'd be looking and go, why? Why is that? Why are you so convinced? Based on this rock and this. I'm like, yeah, okay. And that's the way decisions were made back then. The finance guys sit around the table and say, all right, let's give them $5 million. Based on one of those maps, to think that's the way it was done was crazy. Nowadays, it is just so much more. I don't want to say professional. I mean, the geologists had what they had back then to work with. It's just so much, and it's not easier. It's just the presentation and the amount of data that you can be informed on or upon is just so much better, and you can make a much better informed decision as to invest or not invest. So it really is amazing to see how technology in the drilling industry has really, really helped make the industry much more precise. It's amazing. Love it.
And to think that they got some hits back in those days, that's wild.
Oh, I know. It is. I mean, you think of the great, the Hemlo discovery, all these things. I mean, it is wild. I mean, crazy.